Good morning, everybody. We have a lower trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. We've got the nearby May corn contract down 2.25 cents at 6.99 and 3/4. July corn futures down 1 3/4 at 6.46 1/2. We've got December corn down 3 1/4 at 5.43. Nearby May soybeans down 15 cents at 15.27 1/2. July soybeans down 9 3/4 at 14.92 1/2. November beans are down 5 3/4 at 13.13. We've got the July Chicago wheat down 7 at 7.22. July Kansas City wheat down 9.5 at 6.85. Spring wheat market just a little bit higher. If you guys are listening on the podcast, as always, really appreciate it. Leave me a review, leave me some comments, especially on the Apple app if you have not already. Could certainly use any review, positive feedback, even negative feedback. If you guys have some constructive criticism, I would love to hear it. Any recommendations for future episodes, I'd love to hear it. If you're watching on YouTube, make sure you hit the like button. Make sure you subscribe to the channel. The channel is growing quickly. And really appreciate everything you guys have done by tuning into this thing on a daily basis. Remember, if you need some additional assistance from me, guys, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I offer a subscription service. It includes a whole bunch of stuff, including my morning email, which goes out every business day at 6:30 a.m. Central Time. It includes a text message service. I'm now offering subscriber-only videos and content. I blasted one out yesterday regarding my cash grain marketing recommendations, corn and soybeans specifically, and also a little bit of winter wheat, I believe. So if you're interested in learning exactly what I'm doing in regard to cash grain marketing, capture and carry, option strategies, all that sort of stuff, check out that subscription service. There's a ton of subscriber-only content that is available out there. And let me know if you have any questions about that. To get into the headlines here this morning, looks like the Corn Belt's going to be pretty dry here over the next 7 days. There really doesn't appear to me to be anywhere in the Corn Belt that's going to see more than an inch of rain over the next 7 days in total. Now, we have had some heavier rains during the last week. You have this band from Oklahoma, Missouri, Illinois, Indiana, Ohio into the eastern Corn Belt that saw some rains this week that certainly delayed field work in some areas, but forecast for the next week much drier by comparison. We're going to be warmer here for the first maybe 4 or 5 days of May prior to another bout with below normal temperatures. But, below normal here in mid-May is not a big deal. I mean, you might see some stuff down in the 40s or 50s, but I think we're done with the really nasty stuff. Soybean harvest in Argentina is accelerating. They've been slow because they caught a lot of rain in March, so they're 32.9% complete versus 18.5% the week prior. So they're making some advancements here, still way below the 68.2% last year for this week. Again, heavy rains resulted in a delayed harvest there, but they're moving forward. The U.S. stock market posted fresh all-time highs yesterday. The S&P is now up more than 12% year to date. The S&P is up 92% from the COVID low posted in March 2020. That is just unbelievable. The Dow is close to an all-time high, did not post one yesterday. Same thing with the NASDAQ. They're very close. I think they're a little bit lower here this morning. You've got optimism regarding a reopened U.S. economy. You've got optimism regarding, earnings, future expectations. And then you've got, of course, the money printing, low interest rate story. And it's a debate out there how much impact this low interest rate deal has had paired with this massive government stimulus. How big of an effect has that had on the stock market versus the fundamental items? Most of your fundamental indicators in the stock market, the way that most people view them, have indicated for a long time now that valuations are just way too high, but it hasn't mattered for a long time. Chatter regarding Chinese corn purchases, new crop corn purchases out of the U.S. continue to circulate, but we haven't really seen any confirmation. There's been talk regarding some pretty large new crop corn purchases from China going on this entire week, and we have not seen a flash sale. There was nothing in yesterday's export sales report. There were some sales to an unknown destination in regard to new crop corn. I suppose that could end up being China, but that sort of chatter continues to circulate. Maybe see some confirmation here at some point. USDA will release its May crop production and WASDE report on the 12th, so that's not next week, it's the week following, but I figured I'd touch on this today. This report, it's worth noting that the May report includes your first look at the new crop balance sheets. So what USDA is going to do, they're going to take their March acreage numbers, they're going to punch in a trend line yield, they're going to assume some demand numbers, and they're going to spit out carryout numbers. So this is kind of our the way that we start building the new crop balance sheets. It's a start. Now you can remember from last year how I won't say wrong, how different they were initially versus what we're probably going to end up with. I mean, remember last spring, USDA was projecting that we were going to have what, a 3.5 billion bushel corn carryout at the end of the marketing year. That corn carryout's probably going to end up being closer to like 1.1 or 1.2 billion before it's all said and done. So you got to take this stuff with a grain of salt, but it's a place to start. And there's also going to be adjustments in all likelihood to the old crop situation for both the U.S. and the world. So that's a big report coming up on the 12th. Brazil's forecast remains mostly dry. I'm not seeing much relief here at all. Key corn growing areas will see very little relief through at least the next 10 days, not much in the extended forecast either. You're starting to see crop estimates fall, and you're going to see more of that. A lot of people are moving closer to that 100 million metric ton area for the total Brazilian corn crop this year. USDA is still up at 109. That's a number that will come down here at some point in time, I would imagine. Weather forecasts, of course, can change quickly. And when you're in like a crop scare type market, and I think that certainly part of this rally can be attributed to this Brazilian situation. When you're in a crop scare type market, any introduction of rain into the forecast could very easily result in a big move to the downside in this market. It could spook some of the fund length or some of the speculative length in the market. It could very easily do that. So you're going into a weekend here where you've got a really friendly looking forecast. If that were to change, that would present some risk come next week. Today is first notice day for May grain futures. Make sure you take a look at any remaining open positions that you have there. Cash cattle 118 to 120 so far this week, most of it at 119. The feeder cattle index has moved back lower, 134.47. Yesterday was down a little bit. So feeder cattle market acting poorly, which I guess is to be expected when you've got spot month corn at $7. Box beef market continues to act really well. It was up $1.26 in the choice boxes, up 79 cents in the select boxes yesterday. In the outside markets, we've got the Dow down 150, S&P's down 21 after that record high close yesterday. Still going to be a really good close for the month, I think. Precious metals are mixed. We've got the U.S. dollar up a little bit. Crude oil is down $1.18 in the June WTI, 63.81. Bonds are about flat. If you guys would like some more information from me, again, check out my website. Everybody have a really nice weekend. I'll talk to you on Monday.